All right, welcome everybody. Hope y'all are doing so good. Hope you had a wonderful Easter yesterday. We had a great time, and good seeing all of you here. So let's get into it, shall we? Shall we? All right, what are we doing here? Well, things are going really good. So, which means a catastrophe must be around the corner because everything's doing so well. All of a sudden, and y'all know when everything goes well for us, that all of a sudden, calamity normally strikes, and we'll see what happens. Since I'm the worst trader on the planet, but so far so good. So far so good. I'm excited about what we're doing now. So the issue is now, have y'all ever heard of Jim Rohn? Not Jim Rohn, the sports guy, but Jim Rohn. So I was listening to Jim Rohn this morning while I was at the gym. Since I'm now a power lifter, I'm gonna come up with one of those Christian powerlifting teams. And instead of us tearing phone books like they do, you see them right, they'll tear the phone books. We're gonna tear 1970s Encyclopedia Britannicas. I cannot wait. So but I was listening to him this morning, and he was saying, you can spend all your time studying the roots, or you can collect the fruit and partake of the fruit. So I hope that's what y'all are doing. Now, we have studied and done all kind of back tests on all kinds of stuff. So, hopefully you're in the game, right? You're not just studying and paper trading now. You are actually in the game. So stop studying the roots and start partaking of the fruit this morning. So good stuff. So let's see what the market is doing. So we're down 0.23%. Now, that doesn't surprise us at all. Why? Because remember, we've got this longer term view that says we are in the bear market. We fully believe we are in a bearish environment. Why? Well, because if we look back over the last 100 days or so, we see the daily chart of SPY clearly shows us that we are pointing down. So that's where Bobby goes, hey, wait a minute. The whole thing here for 100 days is pointing down. Okay, dummy. That means, and you say things are pretty clearly defined, right? Clearly defined to upside, clearly defined downside. And I called the bear market here. Everybody laughed because we get up to the top of the linear regression channel, but that didn't faze me. So we're still going downward. Doesn't mean we can't go up here before we go down here, but we are clearly going downward. All right. So set you up a little free account at TradingView, do your little linear regression. You want your 20 and 50-day moving averages in here. Here's that goofy indicator I bought for $25 or so. RSI. Why is it on there? I have no idea. I really don't. All I need to see though is linear regression. Caveman, point down. So point down mean we go down. Okay. All right, good. So I'm all with that. All right. So let's look back at the market. So we're down 0.27%. We are, however, inside of, well, almost inside of the opening 15-minute range, which is shown here in the little gray area. And doesn't look like we want to get above that today, does it? So right now we're below the overnight high. We're below VWAP. We're right at the cash open. And you can clearly see this is an hourly mid band, kind of shows you what's happening hour by hour. And that is going down. AD is negative 202, which is kind of weak on the day. And it made its lows here. Went up a little bit. It looks like we are heading back down low again. Now, look, apparently everybody is not back from the Hamptons because everybody and their mama is, our 3,168 is our average contracts per every 2 minutes here. So low volume. We got to let everybody get back from Easter. All right. So let's look at our a volume profile in Big Green Monster. Look at me, I was looking at the buds. Why I look at the buds? I have no idea. Sorry, I'm sleepy, young. I did not sleep good last night at all. Oh, Lord. Had to get up and watch some Better Call Saul. I love that show. I love Better Call Saul. All right, so I got Fibonacci fans over here. Do I need Fibonacci fans? No. But it looks like we have gone from fair value to oversold to overbought. Now, that doesn't really surprise us at all, does it? That we would go from oversold to overbought. Remember, we said, hey, we may stick in here a while because our point of control's in here. But overbought means that we are overbought for the fair value zone below it, which kind of fits with our narrative that we are going downward. All right, so I don't see any surprise here on our volume profile. Now we can always pop back up. We always know that our point of control here is pretty strong. Volume's real comfortable there, but we're overbought for the fair value zone below. So what would I say? Hey, watch out below. Now our skew driver hasn't been giving us any good indications at all. Looks like skew driver is about 112 to 117 today. Is that what y'all got? 117, unbelievable. Can't believe my skew driver is actually working today. I've gone a couple of days without recording this. So today is the 18, 22, what do we say, 117. So it's still elevated. Still elevated. Oh, what's wrong? Did I do 21? Oh, come on, Bob. Bob, oh, Bob. Man. Let's see what a skew driver looks like. What did I do wrong? What have I done? Friend and neighbor? 49, 48, 46, 331, 44, 45, 45. There it goes. That looks right. All right. So, we have not been down here in some time, y'all. And remember, that's what I told you. The problem with skew driver is it can stay out here for a long, long time before it ever normalizes. Well, when will we see normalization between this 25 and 35 line? I don't know. But of late, this hasn't been a good tail, right, on market movement for us. All right, so that's fine. So let's go and look at the IRA account. See how we doing today. So IRA account, which one is it? This one. So let's look at our Greekies today. So we're at $350 something on the day. So let's record our net lick and let's do our little thing. Net lick. We were at 101,675. What are we today? 418 in the year of our Lord 2022. Let's see if I can open it up here. Bobby, why aren't you showing your net lick here? Calls, y'all know. Someone's calling me from Gatesville, Georgia. I don't even know where that is. Here we go. This account. All right, so we're at 101,949.50. 101,949.50. All right. So we're up $274 from Friday. I'll take it. So let's do our Greekies. We are at 38.26 in deltas. 38.26. What's our theta? We finally got to 0.1%. Let's see what we are today. Aha! That looks good. 104.48. 104.48. Look at that. Nice, beautiful green. We are where we is, so to speak. Now, what's that evil Vega doing today? Vega is 297. Negative 297. What was it, 91 or so? Yeah. And Then the other thing that we monitor is our buying power. So our buying power, we are a little less than we were the other day, 35,274. 35,274. We're right where we need to be. Look at this, y'all. Oh my gosh. How can I get any more perfect? Look at this. We're at 0.1% on our theta. We are 34.6% on our on our buying power. Where should we be? If the VIX is between 20 and 30, we should be at 35% max. Well, I don't know if I can get any closer than that. And look at that. We finally got our theta and our buying power right where we need to be. Oh, this is so good. Now, let's see if we need any delta adjustment. I would assume that we don't, because we go to this one right here. It says no adjustment. Yay. So everything looks really, really, really good. So I'm almost at a point, y'all, that if I wanted to, I can start putting a trade on and taking a trade off, putting a trade on, taking a trade off. But let's make sure that we're within where VIX needs to be. VIX is the fear index, the volatility index. And indeed, we are, look at there. Volatility should be killing us today because it's up, but it's not. 23.24. Spreadsheet. That's exactly right. So we are at, it was 23. So VIX between 20 and 30, use 35% of your buying power. Now, you know, if you got a smaller account, you can use more. This is just trying to keep you from blowing out your account. Right? You don't want to use too much buying power. Theta is also a measure of risk, so you don't want too much theta. So between 0.1 and 1%. So all's good. So I'm at that point that I can start taking them off if I want to, or I could say, yeah, I could wait another day. I guess it depends. Let's go see how everything's looking. Do we want to take a trade off? All right, so show our groups, show our little groupies. Can you show the new value zone? New value zone. Ed, are you talking about the fair value zone? What are you talking about? Let's show the fair value zone. Let me move this thing. We'll draw a field fan. I want a hand. Here's fair value zone. So this is over sold, over bought, way down to 4,291.74. So if this indeed holds, we should be coming down to this zone between 42.91 and 40.22. Here's where I think that we should be going if we continue going down. Now again, we could bounce up before, you know, but if we remain oversold, overbought, then we'll go back into this zone. So here, 42.91 down to, so you can see this on 40.22. Here's the zone, fair value. Okay. All right, so let's see if we need to start taking something off. Let's see if we got some good winners here. Oh, negative 44%. What a horrible trade that was, putting on those SPX loans. But that's insurance, right? You're paying for insurance. All right, so we got a 112 second, up 123%. Oh, behave. Man. Now, y'all, here's the cool thing. The market's down. Why is this up? Why is this up? So 112, y'all, on the put side. You think a down day make us, that's why I like these trades. I mean, this is a cool little trade. 123%, up 112%. Oh, that's just, but look at this one though. We're up $912 on that one. So that's the thing that you would say, well, maybe we need to take that off. I don't know though. Look at the theta we're getting from it. So if we took this off, that would kill a lot of our theta. So, and I'm kind of liking more comfortable doing them in the micros. So see, this only gives us 4 thetas. So I'd be probably more apt to take this one off. Let's see. 112 second, up 108%. Look at this. Up 92%. All this is on the put side stuff, y'all. Up 112%. Look at us. My BSH diagonal. Boy, whose idea was that? Putting that garbage on. Down 187%. 112 second, up 25%. 75%, 8%, up 60%. That's how fun this is. Up 26%, up 50%, down 14%. Up 63%. That's why I was telling y'all, look, it's too good to be true almost, right? That we're doing so well. Calamity's probably going to strike any moment now. Up 122%. What was this one up here? 123%. 123, 124, 123. It's hard to choose between those. Oh, there's my bear spread. Look at that. Yeah. Which one would I rather close? I don't know. This one gives me negative delta. This one gives me negative delta. So I'd probably close that up because I still think we're bearish, right? So up 5% and down 10%. So this is the fun part as you start putting things off, taking things up. So let's look at this one. Be neat to just see if we could look at analyzing this trade. So let's look at 112 first. What does it look like on the analyze tab? You don't know how to determine the new zone. Okay, let me show you how to determine the new zone. The new zone, or the fair market zone, right? Is look at the one that has the 50% line in it. So if you find the one that has a 50% line in it, then just draw from the solid line up, and this is the fair value zone. See how all you got to do is find one of the 50%, and then the way we do it, we've got the little dash line. Right? So anytime you see the little dash, that's the fair value zone. And then the one above it, of course, is overbought, which is where we are now. And then the one below it is oversold. All right. So, all right, old Bob, you want to close one or you want to put one on, Bob? No, I don't want to be greedy. So let's look at my macros. I said my macros. Dad blabbit. Dag nabbit. Single symbol. So we want to show that one group, which was a group we think about closing up 125%. Analyze. Crap, what was it? 112 first. So you can see what it looks like, right? Let's go 112 first. Here's our trade. So I don't know if I want to close it or not. Why do I not want to close it? Because I'm in a good little profit hunt right here. This is T0 right here, right? We're up $84 on the trade. You could take the $84, or we could say, hey, baby, hey, darling, you know, what happens if we come down into the little 10? Well, if we come down too fast and go down 5%, we'll only be up 51%. But if you go there at expiration, look, we've got a nice 325 that goes down for a long, long period. Look at this. Oh, unbelievable. I want to put it on, or I'm going to keep it off. All right, let's see how much profitable my short put is. These are up 59%. So, you know, it's one of those things that Matt was talking about the other day. You know, hey, dude, you know, this thing, these two right here have already paid for your free debit spread. You know, you could just close this. I mean, that's why, and y'all are just chatting away in the Discord trade. Oh man, what if I do this? And what if I do this? The options, so to speak, are endless with this trade. You know, you could, so you want to use it as a hedge. What's your assumption? If your assumption is bearish, yeah, you could close and take risk off to the downside, right? And have your free put debit spread on, especially if it meets your assumptions that the market will continue to go down. I don't know, man. That's what I know. And you got to trade up 125%. What do you want to do? Now, if we close this, how much can we close the put debit spread for? Matt chastised me the other day for not getting enough credit. So if we close just that, well, we got a pretty good credit, right? You're getting $67.06. What a great trade. What a great, yeah, what a great trade. I don't know. I'm a little indecisive today because I just rolled out of bed. All right. So why don't I look at putting a new one on today. Let's definitely look at that. All right, so mark it down. Mark it down. That means that we want 111 or 112. Hold me, I gotta think about it. Matt, what does that mean? I want 111 or 112? Probably 111, right? Are those fibs the percentage lines? What about closing one of two? That's a good idea. Take risk off, right? I like that idea. Take one of two off. Yeah, they're not fibs. Let's go back to that. So anybody that wants to know what these lines are, make sure you do a search for Sweet Bobby and Voodoo. Right? I've got a whole little class we did on Voodoo charts. So we change our fibs. We use the fib retracements, but we change the levels. So they're not true fibs. Now, if you're a big fib guy and you use regular fibs, Fibonacci retracements, then you don't want to change them. But let's see if we edit properties. Yeah, see, we do this. Here's what we go. We change our coefficients to -1, -0.8, -0.5, -0.20, 0.2. We change them to this. So, you know, make sure if you're a big field person and you use those extensions, you don't want to change it, but I don't ever use them. So I keep mine just like this. So what would we do? I was doing something. Oh, we were going to build a trade, weren't we? I think we're going to do the 111. All right, 111. So where we go? All right, y'all. Well, we're going to open our little macros. Open our little macros, and we'll go closest to 60 without going over. Look at that. So we have all of our risk is finished. We are done in anything 43 days to here. Now this is kind of cool. It shows us that we've got some trades in the 11-day cycle. So, you know, we should be probably getting ready to, you know, to get these little puppies off at some point. Got a lot in that 11-day cycle. But today's about the new trade. So we'll go 60 days. Okay, Bob, what are you going to do? Long put vertical. And I don't have to worry about stupid Tasty Works getting hung up because this is our first trade here, right? So you do a 50-point wide put debit spread. And this one's going for 17. Well, we found that we kind of like paying these for $10. So move it down where you go to $10. Go to $10. $10. And I normally go to where it's about 975. What is it? Are we skipping 975 today? There we go. So we're going to try to pop that up and fill that for $10. The liquidity is a little low today. Let's see if we get filled. I got a feeling we are not. So I'm going to go up to 10.25 to entice the Hamptonites to come out to take my trade. Let's go working. We'll go up to 10.25. Since the volume is so low today, this should bring them out. There we go. That got them off the lake, didn't it? All right, so here we go. So we've got to put debit spread. So now we're going to sell something to pay for it. So if we spent 10.25, we really need to bring in $20.50. Let's go find something where we can sell for $20.50. There's 20.25. Aha, the 36.90 we could sell for 21 bucks to pay for that. So now you could do 2 at 10, right? If you wanted to get way out here. But on down days, since the market's already down, I normally just do a 111. So let's do the 21 here. And we'll sell that one. This one will fail. How do we know that? I don't know. Trial and error. All right, so here we go. So there's our 111. So let's see if we can look what that what it looks like. Let me take off our trades. Trades, show positions. So let's see this little beautiful little thing. So let's go here, go to the curve, go to the analysis tab. So what does a 1-1 trade look like as a risk profile? Looks like it's still showing all my stuff. Expiration. New video. Can't be showing all my stuff, right? Because we shouldn't have downside or upside risk on a 111. Looks like it's still showing all my positions, but that's fine. Let's look at what all of our positions look like. So I don't know how to take that off. Let's trade, show positions. Now see, you see the fortress that we built here. Oh, isn't that a thing of beauty? So, you know, if you're going down, you got some downside protection. Now, this little orange line is the T0 line. That's today, right? So if you go down too fast, you can start losing, you know, down here in the 3900s or so. But at expiration, you got this nice little profit hump that just kind of keep going up and up. Let's see what we look like on the right side. We do have some calls as well. I'll bet you, I know y'all. I bet very few of y'all are doing these on the call side because y'all scared of the calls. That's fine. You don't have to do them on the call side. It works on either side, but y'all are like, I know this market for the last 27 years, we've done nothing but go straight up. I know you get scared, don't you? Calls. I hate calls. We all hate calls. But, you know, every now and then, if you really believe what you really believe, and keep in mind, there is no good use. Have y'all seen our president? After he gets speaking, he tries to shake somebody's hands and nobody's on the stage with him. I mean, it's really embarrassing. And then you got Putin doing all his stuff with all the evil stuff that he's doing. And then you got China just ready to take over Taiwan. I mean, you got inflation out to caboodle. It's just, I mean, the world's in a mess, but it's always in a mess. So I don't know why, you know, interest rates are going to be raised. We're in a tizzy, but we don't get upset about it. Yeah, so here, let's go. All right, so I put my trade on. So let's go put it on in the other account, in the IRA. Move that over to the side. Some of y'all don't got 3 screens like I do. That's fine. You don't need anything but a phone to do this. You don't really need all this stuff. You really don't. Just put your trades on, run it to your little Greeks. Don't get too one way or the other. So let's put it on over here. So we're going to go into the micros. And this is our IRA account. Y'all, a lot of y'all say, can you do all this stuff in IRA account? Yeah, with futures you can. It's kind of cool. That's why I love futures. 1256 contract. You get the great tax treatment on them. Oh, has everybody got your taxes done? Oh, I just filed everybody's yesterday. I got friends that have my taxes. I did a friend's taxes. Unbelievable. Got them all filed. Everybody's happy. And I had to file mine by paper because IRS didn't have the correct forms. Stupid. That's what was I doing? 41 or 36.90. So let's do it. 36.90. 36.90. And over here, you do it as one trade, right? So here we go. Selling that one. Hold your control key down to get all your strikes done. 41.20, 47. 41.20. Buy this one. Control. Buy that. And then the 40.70. Come on, baby. Come on, little darling. 40.70. Boom, chakalaka, chakalaka. So we got to make this less advantageous to us, right? So I'll move that down to the crap. 75. Probably not. Probably daggum not. So it's going to take me $687 of buying power. We're taking in 54.34. It's kind of cool to look at what your return on the capital is. 54.34 divided by 687.25 equals 7.9%. I like it. I like it a lot. That's almost like buying an I bond, which you can do. Talked to my college class about that the other day. You can get up 10,000 of it, or if you're getting a refund, you can use up to 5,000 from your refund to buy additional I bonds. You could actually buy up to 15,000 in a year if you're getting a tax refund. All right, so let's put this in. Let's see where we're going to put it. So our micro trades are 1119. So why don't we call this? What would I call one coming at? How about the 11110? Very creative, y'all. 11110. My stripes are, you don't have to record your stripes, it takes a little while. I just like looking at them, especially at the end of the year when you got a million trades. Go back, see where the stripes were. All right, we put this one on the put side, and the strategy. What is the strategy? The strategy is the 111 trade. I said the strategy is to click 60 days. What's today? 4/18/22. And we got that on, same thing as we did on Friday, 11.75. So we got 54.34. There you go. Yeah, yeah, baby. That just looks good. Look at all the nice trades. So let's go back over here. 11110. Put that on. 110. Control, right click. 11110. I don't think I am going to take anything off. Leave them on, baby. Move to group, add group. 11110. So what you could do is you could call some of these, 111 income trades, and like I could have taken off I could take off the 2 here and just leave this as a total hedge. It's just, you got so many options. What do you want to do? What do you want to do? What are you saying there? Filing in a couple hours, fortunate to have to write a small check. Yeah. Let's see. Earlier you had mentioned you stopped doing the 111 and ES. What was the reason for it? Was it cause of spam margin expansion versus doing an MES? 36.90. Nikki put 26.90. Oh, did I put it in there wrong? Yeah, 36.90. Thank you. 36.90. There we go. So we got our little spreadsheet that tells us, what all we're doing. We hadn't closed one in this account yet. Y'all want me to put one on the other one? Might as well, right? Repetition, baby. So let's go to the little, let's go to this little account. This is the one we've been taking something off every day. This is a fun account. That's here we get to go. Take stuff off. Let me get rid of these. If you see them, they don't have a gear on them. That's because I took it off and hadn't deleted the group. So let's take off this one. Delete that group. Yes, we will. All right. Let's go quickly. Let's see what we got here now. 63% off. Care about you. 8% down. 9% up. Where's my big winners? 46%. Come on, we got to have something better than that. What's it? What? Gosh. 73%. That's more like it. 73%. 60%. Huh, you mean nothing to me. Negative 95%. Unbelievable. 112. Third after harvest. Yeah. That's the one we left on just for the hedge, right? 71st, 15%, 109%. Screw you. Let's go here. 112 bear second. 121%. Unbelievable. They take you off for the heck of it. You give me negative deltas though. Oh, I love my negative deltas. I'm gonna take you off for this one. See what I'm saying with options, y'all? We need to write our rules out, don't we? 13%, 41, up 110, up 61, up 63, and up 3.64. I guess I'll take this one off. Struggle. Let's look at this one, what it looks like. So our 2 have already paid for our put debit spread. Well, that's cool, baby. That is cool. Everything's on the call side. So let's take this off. 112, bear second. All right, here we go. Let's take this one off. Create closing order. I'll show you how we do this. So if you're buying, you want to buy as less as possible. So I'm going to move that down to the mid price, right? So that would be a debit of 52.44. See if we can close that. There we go. So remember that debit of 52.44. Paid out 52.44. Put a negative on it because that's money coming out. And then so we closed our calls. So then let's close the put debit spread. It's a 112 bear. This is one of the hybrids I come up with that I really like. So let's go close this. Sell that vertical for $12.50. So if you're selling it, you want to make sure you get as much as possible, right? So we'd rather get filled at the mid rather than that. So let's see if we can get filled here. So this is 59.56 in. Nothing. Jack, squat, crap, nothing. So make this where it's less advantageous to us. So we go 12.25. Remember this number, 58.31. Come on. 12. Plays, go down 12. 57.06. See, it doesn't change that much, though, right? We're talking 57.06. All right, so let's do that. So we brought in 57.06 plus 57.06, which means we closed the entire trade for a 462. Say it with me, credit. 462 credit. Let's open it up. 462 credit. 462 credit. Micro. 462 credit. 462 credit. Y'all don't let me forget that. 112 bear second. 462. Here it is, right? 112 bear second. Y'all correct me if I'm wrong. So we closed it for a 462 credit. All right, so let's go over and put that on. 462 credit, which means this says debit, right? So we didn't close it for debit. We closed it for credit. So I got to make this negative 4.62 credit. And we close this in the year of our Lord 4/18/22. So we made $57.49. Look at us, huh? That can send me and mama to the Applebee's on a date night. I forget why all these are going to be sale reference areas, but I ain't worried about it right now. I'm not worried about it. I got bigger fish to fry. So let's take mama to the Applebee's. All right, so we close that one, right? So, okay. There we go. So remember, now this is the one we've got left open, right? We've got an after harvest. We're leaving our hedge on. We've closed the naked components. We're just leaving the put debit spread on there. All right, and then again, we put our new trade on. So this one's going to be the 111.76, which means you've seen me do 150 or more of these things. How many losers have we had? None yet, which means I'm getting really, really scared. That means they're coming. 176. Our strikes are 120, 40, 70, and 36.90. On the put side, strategy is 111 at 60 days. 111, 60 days. 22. I remember that one day that I was able to figure out how to do the trade. Yeah, but here we go. All right, so we're going to do 40/70. Sell this one. I said we sell that one. Buy that one. We selling the 36 now. All right, 36.90. And we believe we're gonna try to get 11.75. Hold on. Come on, 11.75. No, we're gonna get a worse feel, dang it. 11.50. There we go. 11.50. Put it in, Bob. Put it in. Put it in, my man. 11.50. So here to my monitor, and we'll call this 111. Control left click, control left click. 111. What was it? 76. 111 add group. 76. All right, baby, we printing money now. We printing money. All right, questions, comments. Pretty easy at this point, right? I hear a microphone. Somebody gonna say something? I mean, it's incredibly boring, I guess. We do the same thing every day, but yeah, it's working. Just keep on going. Oh, here's what I want to show you on this account too. Because Lord knows we're down big. Why are we down big on the year? Because I don't run from it. Y'all know, I'll tell you. It's not like I'm not one of those people that hide stuff. It's because we were doing the TQQ stuff, right? And I mean, I like that overall plan, I guess, but y'all were laughing because I lost control. I didn't really wasn't able to do anything, just holding, the hedge fund, excellent venture stuff. I'm still doing that in my little Roth IRA, but I lost control. I was subject to the market whims. And I just hated sitting here every day going, well, dang, we're down another 2,000. Well, dang, we're down another 2,000. Well, dang, we're down another 2,000. I mean, day in, day out. Now, if I was going to hold that long term, which I could, I don't know. It was just incredibly boring that we would just open it up and go, okay, well, we know we're going to hold for 5 years, but nothing we can do, just watch it. And I'm not a watcher. I'm a doer. So I didn't like losing control. And we put little 111s in there too. We just didn't have the buying power to really put on tons of these trades. So I like this. I like having control. So we're back in control. Back in control. But what I want to show you is, even though we've made mistakes in so many things, here's what I really like. Take groups off and show you this. Here's what I really like. This. Do y'all see this number? Why, Bobby, are you doing the 111 so much? Because it's working. Up $5,500 on a $30,000 account. What do we got in there? We got 29,000 or so in this account. So, you sit there and go, if you could do a trade that's up 5,500, and y'all remember it was like a week or two ago, we were at 4,000. Yeah, we were at like 4,000. Y'all remember when we were at 3,500? We just keep growing this day by day by day. So even though we were down big on the year, I'm not looking back. What I'm looking at is the 111 trade and the 112s and all the variations that we do. And I go, okay, 55, 14 on a $28,000, $29,000 account, 29,000. You keep that up, that's up what, 19% after a quarter. Now I know, don't beat me up and say, Bobby, but yeah, you've lost several $1,000s on the year. I know, because we were in the TQs and all that stuff, the TMLs, and I got it. So this gives me more control. I'm just trying to think, hey, we've been doing the 111. How many have you done? Well, I've done 76 of those in this account. Up 19%. So you start extrapolating, right? Well, if we do that a quarter, what if we did 4 quarters of that? Well, then you go on this size account, hey, that's a 76% return. So, and we've got 2 different markets, right? The market of the final quarter of 2021 is entirely different than the first quarter of 2022. So the trade has thrived in 2 different market conditions. So if you and I will be smart now, right? And that's, the tendency is to find something else and to start, going out and chasing it. Stop it. Let's just work on this. It's doing well. Let's keep going with it. See any questions at all? I love it. I love it. This is what I love right now. Nice. We're doing well. This trade has a little built-in hedge. I'm not even running the Black Swan hedge over here now. Not mean that I won't, but right now I think everything's kind of controlled. I'm not looking for an imminent crash. I'm just looking for a nice little going down, 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 down. And even though that I've got positive deltas, we're still going up, up, up. Beautiful. Beautiful. All right, guys, good session. I'll see y'all tomorrow.